Hello everyone and welcome to Momentum channel. My name is Mo, and in this video I'm going to give a walkthrough of how you can create a Google Sheet to keep track of your stocks in the stock market and manage them properly and effectively. This will be an easy walkthrough, step-by-step video, but if you do have any question along the way, feel free to post it at the comment section, and I'll be sure to respond to each and every of those questions. All right, without any further ado, let's get into it. The first step that you want to follow when it comes to creating a Google Sheet on Google is to go to the Google document. The link is docs.google.com, or you just simply search for Google Docs. When you log on to the page, you see something similar to this, where there are a number of options for you, whether you can have documents, sheets, slides, forms. But what we are interested in is the sheets. So you're going to click on sheets, and that allows you to have access to web-based Google Excel. I do have a number of sheets already here, but what I'm interested in, I'm going to start from scratch, as I mentioned. So you click on blank. A new spreadsheet opens up for us. This looks very similar to Excel, Microsoft Excel, but don't worry if you don't have Microsoft package. In this case, you can always access on the cloud using the Google Docs, and it's free for you to use. All right, so what we're going to do first and foremost, the first piece for you to know is knowing about your company that you're interested in. And what is the company's, we call it ticker symbol. Ticker symbol is those few letters that represent and symbolizes the company, and every company in the stock market, listed public in the stock market, has a unique set of character. We call it as a ticker symbol. So I'm going to call it as perhaps ticker symbol. And to just give you an idea, perhaps I can walk you through one example. If I hop on over to my account here, this is my account with Wealthsimple Trade. Yeah, my investment portfolio right now. I wanted to just give you a quick, maybe pick one example from here. If I go over to my personal account, you see I have various holdings here. And one of them is this one. Take a look. We have a company called Apple, and the ticker symbol is those bolded letters that you see up over there. So it's AAPL. So AAPL is the ticker symbol for Apple. For another example, if you look at, for example, Bank of Nova Scotia, BNS is the ticker symbol for that. Okay. All right. So we're gonna go back to our Google Doc and take a look here. You notice we're gonna put AAPL, the one that we saw for Apple, as the ticker symbol. Now, next we want to have the company name. Okay, from here onward is where the kind of the magic starts. I don't want us to do a lot of manual work. I want the Google Doc to do all the magic. So this is a simple kind of formula that we're going to use. We're going to type in =, Google Finance. Why Google Finance? Because all of these data essentially is being pulled from Google Finance, but it's automatic. That's the beauty of it. So =, Google Finance. And from there on, what we're going to say, we're going to put the parentheses open. We're going to let this kind of file to read the name of the company for us. So what is the ticker symbol? Because Google Finance has to know what ticker symbol you're looking for. So I will click now, after I type =Google Finance, open parentheses, I click on the cell next to it. So the cell that says A2, Apple. So I click on that, okay? From there, I type in comma, then I put the quotation mark open, I type in name, and I close the quotation mark, and I close the parentheses. Okay, so what I did, =, Google Finance, parentheses open, the name of that cell, like the one next to it, the first one, like in this case, AAPL, that one, and then comma, quotation mark, name, quotation mark, close, parentheses close, and then I press enter. So what's going to do, it's automatically going to populate for me the name of company. Crazy, huh? Okay, so next, let's move on. The fun is just getting started. Okay, next, what we want to do, we want to know what is the last perhaps price for this stock, right? What is this price trading for? And the prices goes up and down. So I'm going to have maybe last price. So similar concept, =, Google Finance, parentheses open. Again, I'm picking the the stock, in this case, the ticker symbol, comma, then I'm putting quotation mark price, quotation mark close, and parenthesis close. There you have it. This is the last trading price for Apple, right? So so far we're on to a great start. Next, let's continue this momentum and have some other information. I'm interested actually. What is this price compared to the 52-week high and 52-week low? For investors out there, you might be familiar that the 52-week range, which is a year range, is an important kind of indicator. You want to see within the past 1 year what has been the highest the stock price has been and what is the lowest the stock price has been. This is indicated by 52-week high and 52-week low kind of range, and it gives investors a kind of a good indication because you want to know how expensive the stock is compared to maybe that range. And sometimes if there's still the price is perhaps still far away to the 52-week high, presumably you could assume that the stock has still a lot of room to grow. It's not always guaranteed, of course, that it's going to go back up to the 52-week high price, but it does give an indication. If sometimes it's already hit its all-time high prices in 52-week high, you might want to be a little bit cautious. You don't want to just buy in because the chances are something that goes up in the stock, it might definitely come down at some point. So you don't want to rush into buying the stock. So having that information handy and readily here and updated would be great, wouldn't it be? So I'm going to say 52-week low and then 52-week high. Okay, so what we're going to do, we're going to add that to our formula. So starting with equal sign, Google Finance, parentheses open, we're going to say select the ticker symbol, then comma, we're going to put quotation mark open, we're going to say low 52, quotation mark close, parenthesis close. So that, okay, boom. The 52-week low price for Apple has been $53, and right now it's traded at $127.14. Similar story, we're just going to type in Google Finance, parenthesis open, select the ticker symbol, comma, quotation mark open, we're going to type in high 52. Quotation mark close, parenthesis close. Boom. The highest price in the past 52 weeks has been $138.79. Amazing. Okay, and one more piece of automatic information, and from there on, we're going to get into some calculation to know what has been your stock return. The last piece that would be interesting is the price to earnings ratio. The price to earnings ratio is also a measure of how expensive the stock is compared to its earnings per share. Usually, for many companies, a price to earnings of under 20 is desirable because historically an average of 20 for the S&P 500 over years, but it is also very much sector dependent. So keep that in mind. There are companies that have much higher price to earnings. We're going to take a look at Tesla as an example, but it is also sector based. So you have to compare Apple to the other companies within the same sector to get a good understanding of, is this PE, price to earnings ratio, high or low? But anyway, so we are going to say PE ratio. So for this one, we're going to go say equal Google Finance, parentheses open, choose the ticker symbol, comma, quotation open, PE, quotation close, parentheses close. There we go. So Apple currently has a PE ratio of 38.82. Keep that in mind. Before we continue, let's just add a couple more. And from here, it's all easy. You don't have to recalculate. Let's just say you're interested in Tesla, okay? And if you're not sure, you could always Google like Tesla stock, and that way you know exactly what is, for example, let's say I'm going to try that. So I'm going to say google.com. I'm going to type in Tesla stock, okay? In the Google search, you already see it says it is listed on NASDAQ, and the ticker symbol are these characters that you see, like TSLA, okay? So you're going to pick that and take a look at that. The last price was $826.16. So we're going to kind of test that and see if that's what you're seeing here. But I'm going to type in TSLA, okay? Let's pick one more, perhaps. What company we are thinking of? Let's say Disney. So I'm interested in Disney stock. The ticker symbol is DIS. Okay, I'm going to type in DIS. Maybe one more. How about Microsoft? So Microsoft stock. The ticker symbol is MSFT. Okay, MSFT. All right. So here's where the magic starts. You don't have to do anything from here onward. If you scroll on the first row that we kind of created, you can see here, right? This one, and the blue box appears. You can always take this and kind of drag it all the way down. That way it auto populates for you the rest of it. Okay. The other way is like you select all of them. Okay, I'm gonna like drag all of them, right? I'm gonna select like so I'm gonna click on one and then slowly select all of them. Okay, and this way it hand selects all of them, and the box surrounds all of them, all the boxes. So at the end, when I scroll over to the edge of it, you see that the cursor changes. So what I'm gonna do, I'm gonna click twice and then drag it down twice and drag it down. When I'm happy, I will just release that. Let's say I want to go all the way until the line that I have information for. If you have more, you can scroll further down. But you see, I'm stopping there. Release that. It's calculating, and voila. It is calculating for me all the information. The company name is populated. Last price has been populated. For Tesla, if you recall, 826.16. We saw that. Or for Microsoft, 212.65. 212.65, 52-week low, 52-week high. So one thing you gotta notice for Disney, it gave us an error for price to earnings ratio, and the reason being is that Disney at this time it has gone over like the stage where it's actually loss making. It is not having a positive earnings per share. Because of the pandemic, they had to close down their parks and lay off a lot of their workers and whatnot. So they're necessarily not in the best financial situation. As a result of that, Walt Disney typically is a kind of profit-making company. At this time, they are not. And when that happens, the price to earnings ratio formula is not going to work. It's going to be something that is not really meaningful. As a result, you're going to see that error of not applicable. So don't worry about that. That's just telling you that there's no positive price to earnings ratio at this time for this company. So good indicator regardless. All right, so that's what we have here. Now, the last pieces of information to share with you before we wrap it up is going to be quickly, I want to add a couple of more details. So what is the cost basis? The cost basis tells you what is how much have you bought a share for. So what is the purchase price? So for example, if you go for Apple, I'm just going to show you one example, right? So if you look at Apple here, for me, I have actually 6 shares of Apple, let's say for my personal account. And the purchase price for me has been, you see my average purchase price or cost basis is $116. Okay. So I'm going to say cost basis for me is 116. Okay. And number of shares for me is 6. Now, here's where I want to add a couple more details. So what is my book value and what is my current value? Book value is how much you paid to buy the stock. So I put equal sign, number of shares, I click on that cell, times or a star sign, the cost basis I paid for. Okay, so this cell, the number of shares, the star sign, the cost basis. That gives me how much I paid for, of course, in that currency, in this case, US dollars, to buy the shares, book value. Well, what is the current value? The current value equals my number of shares multiplied by, or the star sign, the last trading price. Because if I were to sell them at this price, this is how much it is worth, right? So I times that and equal. This is, you see, I bought them overall, I paid 696, but it's now worth 762.84 cents. We're now going to calculate our return. So the return on this stock. How you do that is you want to know the current value, and so you say equals current value minus how much you paid for it. Okay, you close the parentheses and they divide it by your book value again. So you get your current value minus your book value, close the parentheses, divided by your book value. This is the kind of a percentage. All you need to do once that's calculated, you go up there and there's an icon that you can change the format into the percentage sign. And you see here, it says format as percent. I think that's the easiest way. The other alternative would be you just multiply it by 100, but it's easy. We just select that. So it shows us our return on this stock is 9.6% positive return. And if I scroll back for this one, you see it's 9.61% return. So similar kind of concept here, depending on how, of course, the stock price is and how many decimals you want to present there. Same goes for other ones. As long as you have entered your cost basis and the number of shares, similarly, you can just drag it down. For for example, and it's going to calculate for it. So for the sake of example, so here in my Wealthsimple Trade account, I'm going to scroll down and find my shares of Tesla. Okay, there you go. We have 2 shares of Tesla here. I'm showing an incredible around 85 or 84% return. What was our average price? Average price is 447.11. So I'm going to put 447.11. Okay, we have 2 shares of it, and from here, you can calculate essentially everything automatically. Okay, so our return has been 84.78. Current value is this much, book value is this much, and so you do the math for that and it does calculate for you. I don't have any shares of Disney in my Wealthsimple Trade account, and nor do I have shares of Microsoft in my account. So essentially, we wanted to show you easily how you can start a Google Sheet from scratch and kind of go through it, do the math, and kind of use this functionalities of Google to be able to create an effective kind of tracker for your accounts here. For instance, if I were to go back to my account, this is one I have kind of ready for my US dollars accounts. You can see you can play with it, make it a bit fancier. You can have your return percentages. You can even calculate what's the overall size of this compared to your overall portfolio. What's your overall return on the account? What's your book value, current value we talked about. And the other piece that, for example, I added in my more complete version is I wanted to know what is the potential to 52-week high. So if my stock was to go back up to its all-time high 52-week high price, okay, what is the potential gain for me? There you have it, folks. Thank you so much for watching this video. I hope you found this step-by-step video beneficial and you gained something of value from it. If you did, please be sure to give it a thumbs up and share it with someone who might benefit from the video as well. And don't forget to subscribe to Momentum channel. Here on Momentum, we post weekly videos about stock market investing, finances, and financial freedom. With that, thank you so much, and I hope to see you next time.